Good evening, everyone. This is Marv Eisen from Timeless Dollar, and today is Monday, February 7th, and I'm making this video shortly after the market closed. And I want to point out a couple of things about today's trading. Today was a Monday, and typically Monday is the strongest day of the week for trading, especially when we had such a great jobs report on Friday. But the market closed down, S&P closed down 16 points today. And I want to explain a few things on this chart. You see the candles printed over the chart, and you see that prices traded within our trading zone for the entirety of the day. But I want to compress this trading zone for you. I want to make the numbers a little more exact, because the trading zone, this particular trading zone, was about 83 points from support to resistance. So if we can compress that number, if we can get it to a more exact level, that's helpful. And one of the things that I do when I make up these trading zone charts, in addition to putting the trading zone on my chart, and this was the trading zone for Monday, and the trading zone was support at 44.43, resistance at 45.24, but you see a bunch of horizontal red lines on the chart. And you also see, of course, the black horizontal line, which is the close on Friday. And these numbers of the previous close, the support number, calculated support, and the calculated resistance number in our trading zone, these are important target numbers. And what we want to do with these target numbers is find areas where the market is likely to trade. And as we can see, and it's very simple, the close on Friday was an equilibrium level where the market traded through a good part of the day. And those prices traded at the equilibrium level from morning up until just past 3:30. So the market always traded above and below this equilibrium level, but it always returned to the equilibrium level. Hard to tell on a chart. I know if you're trading, you know it's difficult to tell. But there are a couple of things that I want to show you here to consolidate your area where the market is likely to trade. And in particular, I want to point out two lines here. This red line here, it's faint. I hope you can see it. And this one down here at 44.72. So we have 44.72 down here and 45.03 up here. And I put these lines on my chart in addition to my trading zone. And what are these lines? Well, most of these red lines, most of these faint red lines are construction lines that I calculate as part of my trading zone calculation. But I add something else. I go back to the overnight session, or to the trading after the market closes the previous day, and I see where support and resistance is. And here on pre-market, I saw that support was down here at 44.73. And I put this line here, 44.73. It's not part of my calculation, but it's where the market found support. And I put this line here, 44.73. And sure enough, the market found support right down here at 44.73 at about 12:45. And again, just prior to the market close at about 3:45 p.m. Just below, but it did trade above it. So these construction lines are important. I give you my trading zone when you sign up for my trading zone subscription service, and that's valuable information. I use it myself, and I try to then restrict that trading zone into a smaller level, or a level where the market might consolidate during the day or might find internal support and resistance. And indeed it did. And of course there was another one here put in the morning at 10:30 at 45.10, where the market basically just traded through that point with an overbought stochastic here at 3:15, and boom, if you caught this was a great catch for the day, because the morning was very choppy. Even when it traded down broke through resistance broke through support here at 44.92. Tough to trade, but this level over here, marked by the resistance level that was put in the morning at 10:30, this was the trade of the day. At any rate, go back when you're trading, look at the overnight session, pre-market session, and see where the support and resistance numbers are, and mark your chart accordingly together with my trading zone. And if you haven't subscribed to my trading zone service, really you should. These numbers are based on Taylor's book method. These calculations, they're multiple calculations that come down to averages, and then you have to average the averages. You can do it yourself, and I show you how to do it in my course if you want to become a better trader. But each day, I calculate these numbers and I make them available for those of you who subscribe to my trading zone service. So at any rate, this is Marv Eisen for Timeless Dollar. I hope you had a great day. Monday, it was a tough day to trade in the morning. Monday should have been a positive day, specifically after the Friday jobs report. But of course, the market didn't believe it. S&P closed down 16 points. So we'll see what happens on Tuesday. Thanks for watching. Trade safely, and I'll see you in my next video.